All right, what is going on, Pitbull? So first off, I want to show you how I'm going to be putting these straddles and strangles out there on the SPAC market. This is a slightly risky bet, but the good news about it is you're not betting on either side to win. If the shorts win, we win, and if the longs win, we win. All we're betting on here is movement. Okay, so currently Einhorn is attacking the SPAC market. We had this new hedge fund scorpion dude, whoever the heck that is, attacking the SPAC market. He's going more specifically at certain SPACs, but there's people coming at all of them. So I do like this one. There's a lot of SPACs that I like. There's a lot of good companies on the SPAC world that are diamonds in the rough, and if we can find them, we will win. So I'm still bullish on these names long term. Short term, though, so this is Origin Materials. This company, RDS Acquisition, is merging with a company called Origin Materials. The last SPACs that merged with materials companies were like MP, I think, was one of them. And that went from like 10 to 40 bucks or something like that. Who else was there? I can't think of any off the top of my head right now. However, watch this beauty. All right, so if you'll see, I just select the straddle. This is an E-Trade. E-Trade is great for quick options trades, really simple. They also have a nice app that works well as well. I'm pretty much moving all of my investments and trading different accounts in E-Trade instead of using Robinhood and Webull. They do charge you a hair, like 5 cents or 50 cents, I mean, per trade or something, so that kind of sucks. But other than that, who cares? It's 50 cents. I'm planning on making a lot more than 50 cents with all my trades. So, all right, so if you'll see here, the ask on May 21st, so you got a whole month, $10 calls is 15 cents, and the ask on May 21st, $10 puts is 15 as well. So I'm figuring I could pick one of these up for 10, and you see the last price that it sold at was 10 cents here. Last price this one sold at was 15 cents here. I don't think this stock's moving much right now. It's kind of stuck right around 10. It's at 10.03. So this one actually has $3 of intrinsic value. So if I wanted to make sure this got picked up, I'd hit market and I'd pay the 30 cents for it. I'm going to try and get it for 25, and I'm just going to start with a $100 investment here. Boom. So I'm going to get 4 calls and 4 puts. I'm going to do it as a net debit for a total of 25 cents per share per contract. So that's $25 each, or no, total. $25 total. So I'm planning on getting one of these for 10 and one for 15, and that's why I do it as a net debit. Now, if this couldn't get picked up, I could do it at the ask at the market debit. It's only an extra $5, but I do plan on getting about $500 worth of these. So I would like to have, at least 20 calls and 20 puts on each. So I'm gonna try and get it for 25 here. Boom, place the order. You see, I'm paying $4 of commission because it's 50 cents on every contract. So that's the downside of E-Trade. Yeah, some people like Robinhood better, but all right. So boom, we got a straddle now on AACQ for May 21st. We have a whole month, and they're both for $10 because it's a straddle. Now, if it's a strangle, I would do like a 12.50 and a 7.50, a 12.50 call and a 7.50 put. Assuming that the only good thing, the only benefit of a strangle is this probably would have cost me 10 cents. It probably would have been $5 a piece. So really cheap, but with the commissions, not so much what you want to be doing, because you can lose all your profit that way too. So now why am I doing this? All right, let's go check out AACQ over here. So this short seller hedge fund piece of shit, Einhorn, is attacking SPAC world because he does not think that they are properly, I don't know what you call it, priced. He doesn't like the way the market's running. Okay, so we see from yesterday. So yesterday at the close, we had over 3 million shares available, and now we have 1.7 million. So that's not a huge move. I like when they're getting down to not many shares available for a squeeze. But they got plenty of shares available to short here. So this is a site called iborrowdesk.com. I go here, you can check the short positions, how many shares are available to short across different brokers. So I go there, and then I'll also, when we're chasing this short trash, I'm gonna go shortsqueeze.com and look here. All right, anyways, here. Okay, my dog's about to go crazy. But look it up here. You see a huge increase in short volume. You see a huge increase in short volume here. Hold on 1 second. My kid just walked in. All right, sorry about that. Anyways, you have a huge increase in short volume. It's up 100%. So the shorts have really come after this. You can see the volume is down, but the short selling is up. That means the people who are selling this are not people who actually own it. So no one actually wants to get rid of their shares for $10, but these guys are trying to push it down. That being said, with the straddle trade, we can go either direction. If the stock goes up, if the shorts lose and you get a short squeeze out of it, some good news comes out of this bad boy, it'll go flying high, real high. If the shorts win and they short this thing into the ground, it's going to go down to $7, $8. You know what I'm saying? In which case we took 25 and made it into 200. If it goes up to $12, we took 25 and made it into 200. Either way, you're looking at an 8x return, which is a return that I'm very happy with. So I believe in these plays. I'm going to be entering them repeatedly on various different SPACs because there's plenty of SPACs that may stay right around $10. They may want to push them to $10 and hold them there because that's where they feel like they're valued at. But if you'll notice post-merger, a lot of they never stay there post-merger. So you could check out United Wholesale Mortgage, UWMC, CLOV, CLOV, MPLN, Multiplan. Those are three actually good companies that merged via SPAC and tanked afterwards for whatever reason. You take a look at a few other ones, MP Materials, DraftKings come to mind. Those are a few SPACs. Skills, those are SPACs that merged and went flying in the other direction. So they never stay at $10. So we can minimally bet. Our only bet that we're placing on this stock right now is that it's not going to stay at $10. And if it doesn't, we win. If it moves 25 cents in either direction, we break even. I'd say over the course of a month, most stocks are moving 25 cents. You know, most $10 stocks are going to move 2.5% at some point in time. So that being said, if you want to try out straddles for the first time or strangles for the first time, these are some cool plays to try it on. They're really cheap, so you can't fuck yourself too bad. And hopefully we get to fuck the shorts, squeeze the shit out of them. If not, we'll ride the wave down with them too. Fuck it. All right. Hope this helped you out. I hope you understand where I'm coming from now. Peace.